Is that you, Ben?
Dale, how's it going?
We're very serious about everything in here. Can you tell? It's really nice. It's
Thinking,
really
where am
nice
I?
to
What's
meet
going
you.
on?
It's nice to
Yeah,
meet
nice to meet you
you,
too.
and thank you for managing the technical issues. Mauricio had to drag me kicking and screaming into the 21st century. So, what a great time to be having you on because you built your following on some great gold forecasting and trading recommendations at Seeking Alpha. So,
Yes.
why don't you tell us how you got involved in the business? I read a little bit about your background. You worked for a couple of banks in some
I did.
function.
Yeah, I worked in
How did you
the
end up? How did you end up there? Were you interested in the markets when you were still a young guy or in college, and kind of?
more for the job really. So I was working for the banks, the offshore banks, and one investment company. Just took an interest. So when I got the chance to manage a portfolio, I took it.
Okay.
Haven't looked back.
Yeah, did you have mentors yourself, people that showed you the ropes, or are you more
No,
self-taught?
not at all. I've been probably on all the investing sites. I've read all the books, and really after that, it's just experience. I think a lot of things you have to learn by trial and error. So made a few mistakes, but getting there and doing quite well now.
Yeah, you can't learn experience. It only comes with the passing of time. And in
Absolutely
our
right. Yeah.
and in our game, that's screen time,
Yeah.
and also living through things, which are include drawdowns or account
Definitely.
blow-ups, or coming in and having a market gap your stock, and becoming jaded, knowing that when a market gives you 5 times to buy a breakout, maybe it's not doing you a favor.
Yeah. So, I
You
mean,
know what I
stuff
mean?
like that. You
Yeah,
only know from making the mistakes, don't you? So,
yeah. So,
so
tell us about. Do you have some views with what's going on here in the market? We finally had, a big spike in volatility in August, and most instruments are holding those lows. The stock indexes, U.S. dollar, yen, euro beneath that 117 high.
yeah.
Do you think that there's another shoe to drop? And I've shifted my view. I've been buying breaks in the dollar even into last week's NFP, but I was a little bit surprised by the fact that the way equities recovered from the NFP, that the dollar
Yes.
that the dollar was weak during that time frame. To me, it's a bit of a market tell that if the dollar can't benefit when equities are recovering, where's the bid going to come from? Should they roll over and retest the August lows?
Well, there's definitely potential for that. That 1991 sort of area on the DXY chart, that would be definitely be a big buyer or a big adder to my long positions at that point.
Down at the
Um,
90 range?
yeah, down into the 1991 range. I mean, if
Okay,
we
yeah.
break 93.75 over the next sort of couple of weeks, we're bouncing this morning, but really we need to hold these lows now. And if we don't hold the lows, there's a good chance we're back to 1991 before it goes higher.
Yeah, I actually, you look at a weekly chart, and I was checking it out today, that with the huge move we had, even 88, I mean, halfway back would be 85. I mean, it's not the end of the secular story of the bull. Just like
No,
perhaps 1750 or 1650 in the S&Ps may not be the end of the equity bull market either, but these are
no.
shakeout corrective moves. Are we on the same page?
Yeah, definitely. I mean, we've had such a nice extended move in the S&P 500 that people are freaking out about a 10% decline. But when you've had such a nice big extended move, then really you should expect big corrections. And I think that's what we're having now. I don't think the correction's done in the S&P 500. I think we maybe get up to the 2020, 2040 range,
Yeah.
maybe a touch higher, and then there's a good chance we pull back and possibly make new lows in that chart. That's a chart that looks dangerous, if you ask me. That has a dangerous profile.
Yeah.
See a bigger drop than perhaps people are expecting at the moment.
Okay. Well, thank you. I'll be adding to my long VIX positions up there. And I'm interested. Would you be willing to share your desktop and show us the kind of charts that you look at? You go to the upper left-hand corner, and you'll see a green box with an arrow.
Yeah, I've got it here.
And I noticed, I went to your website. You're a big believer in social trading and having a community. You guys have a wolf pack. But you know what? You've walked into a lion's den. Because in Lara, we're lions. That's our animal spirit. We have the hearts of a lion. And
we started the week we started.
Wolves are, unlike coyotes, are very noble animals. In fact, my dog looks a lot like a wolf. So, tell us what you do there. Do you have a live trading room? And
Sure, show you. This is the trading room here.
Got you.
Anybody can create a post or a thread in the room, and anybody can talk to each other. So you can just talk in real time. So, for example, this is some of the stuff that we've been talking about this morning: the jobless claims and the reaction in the dollar and the reaction in gold. And like for example, last night we did a look at the miners and the longer term kind of profile. Did a little video for everybody there on YouTube. But you can also have a look at all the charts. So all the charts I post up, you can have a look at here. You can scroll through them. I don't know if you guys can see that on the screen share there. But you can scroll through them, and any that you really want to have a good look at, you just click on.
You even use point and figure. What old school guy taught you that? Huh? Come on now, you're talking my generation now. X's and O's on the floor.
Oh, point and figure, yeah. That's trend. Yeah. That's pure trend.
Yeah.
So can you see this HUI chart?
Yeah.
Everybody is.
Are we almost at the top of the wedge line now after the last couple of days action, and now we should get a little pullback?
Yeah, I think we're at the top end. This chart's got to get above 155 to even stand a chance of having the low in place. There's a lot of it's getting very frothy out there. The gold sites and the people I talk to, everybody's talking is the low end in gold, but you've got to take a step back and realize that we're up 10-11% from the lows, and we've done that in 3 months. When we look at other bear market lows in gold, you tend to find that you get a 30% rise over 3 months, that kind of thing. You see a real big rally before a consolidation, which then holds the low, and then you start to see buyers coming in. In this chart here, looking at the HUI, it's a wedge within a wedge. So the first thing you've got to do is break above this 155 level, and at that point you open up a target at the 190. But until you actually got above 190, you couldn't really confirm the low in place. In fact, I think we're probably going to make new lows in all these charts. And I think it's already getting ridiculous.
Bullion too, maybe 1040 still in the cards.
Yeah, lower.
Then I'm going to be wrong about the dollar, aren't I? I mean, can I be right? Can I be right about the dollar going to 90, where you would add on to your long dollar positions?
Yeah, I think
make a new low.
Well, gold will go a little bit higher while the dollar does that, if it does that.
Okay.
Let's have a look at my dollar weekly chart. If that'll load up, let's hold on. Some of the long-term stuff I keep a track of here. So this is my long-term dollar chart. I'm seeing a high-level consolidation. So even if we did pull back to the 1991 area, I'm still seeing a move back up to at least 103, probably 106, maybe even a bit higher. That would just be testing this trend line here.
Okay.
So at that point, I think gold goes lower. I think a lot of the commodities go lower, and it probably happens into the first half of next year, that kind of thing. Okay. The other thing as well is that...
That's a nice flag. That was a great look.
Yeah.
I love it. Hey, Ben, I love your charts, man.
Everyone would be buying that if that was a stock, we'd all be loving it. But it's the dollar, and everyone just hates it. So they all want it to come down. I don't know why.
So what's your long-term target? That looked like a wave 3 up there at about 104. Are you like in the 120 camp? The
yes.
Super Bowls? Okay.
Very much in the
120. You're talking about like an 80-cent euro.
Yeah.
Okay, got it. All right. So then, do you think that when the dollar rallies, that the equities will rally, or will a strong dollar continue to be a bane on the multinationals because of currency translation here in the U.S.?
I'm not a big. I don't think. Don't get me wrong. It's having an effect on stocks. But if we do get a bit of further downside, much of that's going to be priced in, and at that point, you don't really have the excuse of blaming a strong dollar for a lower share price. At that point, I think it'll all be priced in, and people can just buy with confidence. I think what's going to drive the U.S. stock market up is the fact that it's just so much worse everywhere else. I mean,
okay, all right. So yeah, I've heard that. So the dollar bull market, because I've heard dominoes, guys like Martin Armstrong say the dominoes are Europe first, Japan next year, and the U.S. in 2017. But so,
well, I mean, I spent my time.
as far as financial pressures in the market and bond market issues, sovereign debt issues. So the next leg up, if you're talking 120 or higher in the dollar index, we could very easily see 2,500 in the S&Ps after this pullback. Yeah,
definitely. I don't think the bull's done with at all in the S&P 500. Okay. I think it does go a lot higher. I'm looking at 2,400 as the next real target to get to once this downside's complete.
Okay, kindred spirits. So
yeah.
Okay. So this is going to end up just being a bear market rally in gold, and then do you have any long-term downside targets? I was thinking of a number. You're younger than me. Okay, so I was actually trading gold and silver in the late 70s when Russia went into Afghanistan, when it peaked at 880.
Yeah.
Okay, and that was a 20-year high, Ben. And sometimes pivotal highs like that end up coming back to be tested, and then I think 880 is around 61.8 back of that whole bull move from 200 to 19.
Dale, that's spot on, exactly right. It will be retested. All the major highs and lows get retested eventually.
Yeah, because we had a 20-year bear market after that, till
exactly.
2000.
Exactly, okay. It's not something that you can just write off. I think we were always gonna hit 1086. I don't care what anyone said. Well, since I've been writing on gold, I've been told I'm wrong 100 times. But in gold, I always had the view where we were at least going to retrace 50%, and my primary is we're going to hit that 885 kind of spot gold price there as well. It's just always. I mean, if this was an hourly chart, you would expect it to hit the 50 or the 618.
Yeah.
I mean, just because it's a weekly chart, why do we think it's going to hold, much higher? I mean, these are all fractal patterns. It's all similar, isn't it? So.
Ben, maybe you're my son. I was kind of a wild guy in the 70s. What do you think, huh?
Yeah.
Call me Pops.
So, Pops, sure.
So this really is giving me a lot of clarity here. So, what do you think is going to happen to the miners? Because I follow things like AU, AUY, GDX, and they've had nice runs. But if there's a potential for sub 900 gold, that would be a pretty generational type buy in the miners too, don't you think?
Yeah, absolutely right. Yeah, I mean, really giving up for this on the site. The review I did last night was basically on where we're going to top, and I think we'll probably top out in the somewhere between the sort of the late 17s maybe, up towards 18, 19, and then we're going to have a move back down to about 9. That's my my primary expectation. Obviously, if we break up through resistance, we'll amend it or something like that. But 9 has been my target on GDX for about 2 years now, so no reason to flip from it really. I think it's still easy.
And that's a next year target.
Yeah, that would be sort of around April. I've got that about April. Looking at where the trend lines and the fibs sort of bisect there, I think that we'd be looking for April. And I think we're running into resistance now on GDX. To me,
yeah, I thought 17 might be it.
Yeah, absolutely. I mean, this is the current chart here. I know we're pushing it a little bit higher today. The dip buyers are coming in, but you have we've already hit the minimum target for it. And I think maybe this 1796 1893 area is probably going to do us, and then we're going to fall again.
What a great 2-week trade. So were you in before the NFP? I mean, that's really what turned it, was the NFP a week and a half ago.
Yeah, we first bought in at around 13, and then when we hit 14.40 and pulled back, we sold. And then on this spike here, we added a little more, and then added a little bit more when it started to break out as well. And we just helped playing with those positions. I've just yesterday I took the first position in dust as well, looking for a reversal at some point over the next couple of weeks. I think this is done, and we at least come back to this kind of region, the mid 14s, and this could be it. You know, this could be the end of the rally over the next couple of weeks in GDX, and from there we see new lows. I think in a lot of markets, the S&P, gold, obviously the miners with it, a lot of markets are going to
crude actually looks weaker to me than the gold picture. So
oh yeah, crude topped.
Another retest to take out the $38 level and trade a
potentially. I mean, this could all be a bigger corrective wave, and we still head back into sort of the mid 50s. I was one of the people who thought we would have got to 54, and we ended up finishing at 51 here. Okay. But we are looking like we're trying to complete 5 waves down here, and if we do, I would expect to retrace back to around the 48, 49 level, and then potentially new lows from there. And I've got 2 targets on the downside here. We reached the first one already this morning, so you've got to be careful on the downside here. I think above 47, and we're done for the time being. We'll go a little bit higher.
What would be your line in the sand in gold that we have bottom? What would change your mind that we're seeing the bottom now? 12.
So yeah, I mean this is the daily chart here. If you can still see my screen.
Right, got it.
Yeah, so obviously you need to be breaking above this trend line here, followed by the 1.618 for this move here. But really, you need to be, in broad terms, you need to be looking at a higher high on the daily chart here, so above 1308, and then a retrace that holds above 1077, and then on a breakout of this level here, I would be a huge buyer, really. But there's other sorts of things I look at. If you, I don't know if you can see this one, but this is the Coppock curve, and using that on the monthly chart really is a good idea, coupled with the 5 and the 20 monthly averages. And you can see here, it didn't give you a buy signal in '99 when gold actually bottomed, but it gave you one in September 2001, and you would have bought at $281, and then it gave you the sell signal at 1676. And basically, you're looking for this to move from zero through the zero line and up into a positive position, and then while it stays positive, you can stay in the long trade. In fact, in 2008 here, you wouldn't have sold because neither of these gave you a sell signal. The 5 never crossed the 20,
and it never got below zero.
Yeah, exactly. So you could have avoided all the noise here. This was just noise, and stayed in that trade 5 times noise
for the easy money, the parabolic money.
Yeah, exactly. And I mean, why put your capital in danger until you're sure of the uptrend? And at the moment, a lot of people are just catching knives. They did it in summer 2013, summer 2014. They just keep trying to buy these knives when really they should be looking for confirmation. We don't have anything like that so far.
Well, but there were huge net short positions at the bottom. People talking about it before this recent rally. They were actually, the hedge funds were net short, sure, but
not
the commercials were net long.
Yeah, I mean, but only very slightly though, Dale. They were more in equilibrium, and what we're looking for really is the speculators to get absolutely net short. So say for example, when we were at 1680-ish back in 2012, just before the big drop. The speculators had over 200,000 long contracts, so they were net long 200,000 contracts. If we were going to see some kind of real rally in gold, we'd want to see a similar sort of thing on the short side, and that's what we've never had during this bear market in gold whatsoever. All we've had is speculators trying to buy dips.
Do you follow Druckenmiller? I mean, he called it pretty good this year. He's a fairly bright-minded hedge fund guy.
Quite a lot of them are buying now as well. Look to be buying a bit, but but I'm not sure. I still think there's another low to come. I think guys like that with big money, you know, they're never really going to buy the exact low. They're never going to wait to buy the exact low. I think really they're just trying to.
You know what I'll say at 880? I'll say don't wait to buy gold. Buy gold and wait. But for now, I'm kind of in your camp, and you know, I was starting to waver.
No, don't waver. I think you know, looking at the all the technical indicators. Put it this way: if we get above resistance, fine. If GDX hits 23 and HUI gets above 155, look to buy a retrace. But I mean, nothing goes straight up and straight down. So even if you did miss the low, so what? You know, it's going to pull back to 16. Just buy there.
Okay, so why don't you tell us about what you do with your community, and maybe possibly, you know, go back to your website and how people could follow you, get in touch with you.
Yeah, absolutely. I mean, it's www.lonewolftrader.com.
Okay, we'll post that.
And basically anybody can come in and they can ask any questions or ask, you know, they can post their own charts, their own analysis, trade ideas for review for the room. I cover a wide range of markets on a daily basis with a video and a ton of charts. And but anyone can post here, so you know, all of our members. And just basically, we have a laugh during the day. Every time you see a little blue sign there, it means somebody has replied or you know, put something in there. And basically, we just talk about all the stuff we're trading at the moment. So
yeah, how many people actively post on your site during the day?
There's just at the moment, we've been launched 6 weeks now, so so not too many, but there's about 50 regular people there now, and I think give us a few months while we're building out the education section and other little features we're looking to add, and I think it could be a good resource for a lot of people, really. So we'll see.
Yeah. Well, you know, I wish you good hunting with your new effort to share your knowledge with people, and you're going to have perhaps webinars to teach people your methods, or some type of ebook, or what's under my services right now?
We are running. Well, we're just testing now. It's in the testing phase.
So you're kind of just past the beta test here.
Yeah, we're just starting to run portfolios. We're going to run a gold miner portfolio, a dividend producing one, and an ETF trader portfolio. Anybody who signs up for these portfolios here gets an email every time I make a trade. And we haven't quite launched these yet. Obviously, I'm going to wait for gold to bottom before I launch the gold miner portfolio. And when the current correction in the share market's finished, I'll launch that one as well. So
you're figuring, you're just gearing up for next April, aren't you, Ben?
Yeah, basically, yeah. I mean, at the moment we're developing the education section, and we're also putting a blog section on the site for my articles. So there's a lot to do in the background, and then we can just concentrate on the business of making money. So we will see.
Well, you know, what's your most precious currency?
At the moment, I love the short on the pound.
Okay, well, mine is time, because money comes and goes, and time is gone forever. And so I want to thank you for spending some of your most precious currency to give us some great looks and views on what's become. People are becoming more interested. You could tell it doesn't take much, you know, a $70 rally, and you know, it's Armageddon.
Yeah.
So I appreciate your views on, you know, your longer-term macro views on the dollar and the gold and the shares, and you gave me some food for thought.
Yeah, brilliant.
So brilliant. I hope that pips rain down on you during this fall trading season, and let's keep in touch, maybe every quarter, see what's developing, and
sure.
I hope to serve you by giving you some visibility to our community. And
yeah, brilliant. Thanks very much for having me on, Dale. It's been great.
All right, Ben. Good hunting, my trading warrior brother.
And you, brother. Take care.
See you at 880.
See you later. Take care. Bye-bye.
Bye.